U.S. markets movement and sector analysis. Last week, U.S. equity markets navigated a landscape of geopolitical tension and significant corporate earnings, ultimately closing slightly lower. The S&P 500 fell 0.38%, while the NASDAQ dipped 0.66%, largely due to initial volatility sparked by President Trump's rhetoric regarding European trade tariffs and a strategic deal involving Greenland. However, the market displayed resilience. A late-week rebound in big tech and optimistic semiconductor guidance from TSMC helped mitigate deeper losses. The real estate and utilities sectors were the week's standout performers as investors sought defensive positioning amid the tariff-induced risk-off sentiment. Conversely, financials faced sharp pressure after the administration proposed a 10% cap on credit card interest rates, which specifically punished major lenders. Energy and materials saw mixed but generally positive momentum, buoyed by gold and silver hitting record highs as investors pivoted to safe haven assets. Key sector drivers. Last week, technology, TSMC's record profit and AI spending plans fueled semiconductor optimism. Financials, proposed 10% credit card interest rate cap weighed on lenders. Energy, WTI crude rose on Iran protests and geopolitical supply fears. Healthcare, strong demand and demand-driven inflation supported robust quarterly earnings. Consumer discretionary, caution regarding consumer spending power following disappointing Procter & Gamble outlook. Consumer staples, defensive flows increased as investors sought safety during tariff volatility. Real estate, interest rate stabilization and defensive rotation led weekly sector gains. Communication services, large-cap hyperscalers remained resilient due to ongoing AI integration. Industrials, General Electric's cautious outlook tempered gains across manufacturing subsectors. Materials, surge in precious metals prices drove significant mining stock gains. Utilities, investors favored high dividend defensive yields during the midweek sell-off. Global market outlook, week of January 26th. The week starting January 26, 2026, opens with a focus on European GDP data and central bank transparency. Global sentiment is cautious as economists forecast a potential 2026 slowdown, though AI-driven investment remains a primary structural support. Investors are closely monitoring the Bank of Japan's meeting minutes for clues on further rate normalization and the US PCE price index for inflation trajectory. Expected stock movers, largest market cap, exchange and rationale, US. Nvidia, AI chip demand remains insatiable following TSMC's record-breaking outlook. Meta, strong advertising revenue and AI integration bolster quarterly growth expectations. UK, Shell, rising crude prices and geopolitical supply risks support energy majors. HSBC, high interest rates and Asian expansion continue to drive profits. Europe, ASML, strong semiconductor equipment demand follows global AI infrastructure build-out. SAP, cloud transition and enterprise AI adoption are driving robust guidance. Japan, Toyota, global automation demand and yen-related export advantages support earnings. Sony, entertainment growth and advanced sensor demand for AI hardware. Conditions and trends, US, UK, Europe, Japan. The US leads with resilient 4.4% GDP growth, while Europe shows improving momentum through fiscal stimulus. Japan continues interest rate normalization amidst economics policies. The UK remains fiscally stable but faces softer growth. Globally, AI investment remains a dominant theme, though rising leverage and sticky inflation create persistent volatility. Anticipated news, forthcoming week. The upcoming week features Eurozone Q4 GDP releases, providing a health check on the bloc's recovery. In the US, focus shifts to durable goods orders and consumer confidence data. Japan will release Tokyo CPI figures, a critical indicator for the BOJ's next move. Additionally, the expiration of the U.S. temporary spending bill puts congressional budget negotiations center stage. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the stock market performance. Playlist, the sound of victory.